With all the things that have gone on in the stock market over the past 6 months, it's been getting a lot of attention. The news has been covering it, there's been articles on the internet, things all over Twitter. People that don't normally pay attention to the stock market have been flooded with all these different things about the stock market. With the whole craze with Reddit and GameStop in January and February, with Dogecoin following up after that, and now AMC, all this stuff is going crazy and people are making lots of money. So this may have piqued your interest. Just a couple days ago, my wife was telling me a story that one of her coworkers started investing in the stock market in January, and he is up about $8,000. So with all this crazy stuff going on, a lot of people are now paying attention to the stock market. And with all this attention turning to the stock market, you may be interested in investing now too. And you may be wondering, where is a good place to start my investing journey? So in today's video, that's what I want to talk to you about. I want to talk to you about some of the more popular brokerage apps that I've used and what are some of the things that I like and things that I dislike about it. So I'm going to go over some of the pros and cons of each of them in this video. Just a disclaimer, this is for entertainment purposes only. I'm not a financial professional or a financial advisor. So if you're looking for specific help, you should seek out a professional in your area. Also, I'm not sponsored by any of these apps, but I do have affiliate links with each of them, which I'll leave in the description below. So if you want to get some perks when you sign up using my links, feel free to use the links in the description below. But there may be other links from other YouTubers or other creators that have better perks, and if you can find those, I'd prefer that you use those rather than using mine because I want you to get the best deal. That being said, I can point out all the bad things because I'm not sponsored by any of these guys, so let's get into it. First, I want to cover a few things that I like that all of these have in common. So one thing that I kind of have to credit to Robinhood that was made popular by them is zero commission trades. So for many years, all of these big companies like Charles Schwab, TD Ameritrade, and Fidelity would make trades for you, but they would always charge you a commission fee. This commission fee was anywhere from $4 to $8, depending on the platform and your relationship with them. Having this commission discouraged a lot of people to trade or invest in stocks if they didn't have lots of money. Because if you wanted to buy one share of Apple for $130, you also had to pay an $8 commission fee. So if you want to do that over and over, the commissions started to add up very quickly. And if you don't have a lot of money, then the commissions cut into a lot of your investing money, and it was very discouraging for a lot of people. So with Robinhood coming out and introducing the zero commission trading fees, then a lot of people got into investing because all of a sudden they could afford it. It made sense to them. So because Robinhood had these zero commission fees and it became increasingly popular, a lot of the other big firms had to cut their commissions in order to keep up and get some of their clients back. So these other apps came out and they also offer zero commission fees, which is really nice because it makes it for the smaller investor like us to be able to get into investing much easier. So all four of these brokerages offer zero commission fees. They all have an app on the phone that is fairly user-friendly and easy to use so that you can trade or invest from anywhere as long as you have your phone. And they all offer a feature known as fractional shares or partial shares, which means that if you don't want to buy a full share, you can buy just part of a share and still get the same rewards of owning part of that company, even if you don't have enough money or you don't want to invest all of your money into the one share. So for example, at the time of recording this video, Apple is currently about $126 per share. Let's say that you have $50 to invest and you really want to invest into Apple, but you don't have enough to invest in a whole share. You can put that $50 into Apple and have just a fractional share. So you'll have a little over a third of one share and you'll still get all the benefits of owning Apple stock. You just don't have to pay the full price. So fractional shares are very helpful if you have a small investing account and you just want to start little by little. So let's start off with Robinhood. Some of the things that I like about Robinhood are that it has a wide range of fractional shares. A lot of brokerages offer fractional shares, but they only offer some, or they only offer fractional shares on the S&P 500 stocks or things like that. Robinhood, for the most part, has a decent range of shares or stocks that you can buy that are fractional shares. So that's one of the things that I like about them. Another thing that I like about Robinhood is of all of the brokerages, Robinhood is probably one of the easiest when it comes to buying and selling stocks. It's very easy to find the one that you're looking for and then either buy or sell very simply. Another thing that I like about Robinhood is the instant deposit feature is very quick. So this is when you want to add money from your bank account to your Robinhood account. You can deposit the money, and before it settles, Robinhood will basically loan you the same amount that you were depositing up to a certain amount. And when they loan you this amount, it's available as soon as you finish completing the deposit request. And this is faster than some of the other apps that take a little bit longer, sometimes up to a day. Robinhood also has a wide range of order types, which is a buy or a sell order. As a beginner, different order types might not be something that you'll want to worry about too much, but one that's important to know about is called a limit order. This means that you can buy or sell a stock when it's at a certain limit. So for example, if you want to buy Apple, you can set a limit and say, I want to buy Apple, but I want it to only complete the purchase once Apple has dropped below $120. If it doesn't drop below $120, don't complete the purchase. Selling is the exact opposite. You can say, okay, I want to sell my Apple stock, but I only want to sell it once it reaches $130. If it's anything below $130, don't sell it. So Robinhood offers a lot of different order types, and some of them might get kind of confusing because there's so many of them. Robinhood also does a semi-decent job of explaining what each order type is, unlike Public, where there's one, for example, that's called a stop order, and on Robinhood it explains that you'll put this order in, and once the price reaches it, it turns it into a market order, which is a normal order. What Public says it is that a stop order is when it reaches that price, they'll get you the best available price, which that's not correct because you think, oh, I'll get the best available price for me. No, they will get you the first transaction they can find, which is usually a little bit higher than what the stock is currently listed at. So you say, I want to buy Apple at $126. When it drops down to $126, it triggers your stop order and it turns it into a market order. So it's going to buy it at the first available seller, which could be $126.50. So it all depends on what the seller's asking for and which order is easiest for them to get. But if you want to hear more about different order types, I'll go into that more in another video. So the last thing that I really like about Robinhood, which is a fairly new feature over the past couple of years, is they integrated a dividend reinvestment plan. And so they integrated this when they started using fractional shares as well. So this means that if you have a stock that pays dividends like Chevron and you invest in that stock, when Chevron pays you the dividend, Robinhood will automatically take that dividend and they will buy a fractional piece of Chevron and put it together with the rest of your shares so that you're continually growing your Chevron investment. As you're receiving those dividends, they're being reinvested into your Chevron stock. All right, so let's go over Robinhood's problems. So the biggest complaint that I always hear is that Robinhood's customer service is terrible. It's nearly non-existent. A lot of times there's just a site that you go to or a link that you click on and you hardly ever hear back from them. So their customer service is not good at all. Luckily, I haven't had to use it at all, so I don't have any personal experience with it, but from all the stories I've heard from other people, it's pretty bad. Another thing that's really bad about Robinhood is that despite it becoming very popular, it's still a very small and a very new brokerage. And so when there's a lot of high volume, like when everybody was trying to buy GameStop, it would crash a lot. Or when people are trying to buy different things, if everybody's trying to buy the same thing on Robinhood, it can't handle the amount of people that are trying to buy or sell something, and so they have a lot of crashes. It's gotten better recently, but it still is a problem. So another thing that is bad about Robinhood is that they don't have a complete list of stocks and bonds. So there may be some stocks that you want to go and look at, or you might be interested in buying, and Robinhood will either say that they don't support them or you can't even find them on there. So then you wonder, does this stock even exist? Am I typing in the ticker wrong? What's going on here? It's just because Robinhood doesn't have it or they don't support it. So another thing that is bad about Robinhood, it's nice that they do offer crypto, but they don't let you transfer your tokens to other places or to a hardware wallet like other crypto exchanges do. It's kind of cool that they do offer crypto so that you can buy it on there if you have money in there, but it's not the same as buying it like on Coinbase or somewhere else. Also, Robinhood has a very small list of cryptos that are available, so that's kind of a bummer as well. All right, so let's talk about Webull. So one of the coolest things about Webull is they've always got the best sign-up bonuses going on. When I signed up for Webull, they had a really good promotion going on that I could get 3 free stocks, which included either Facebook, Google, or Amazon. Those were of the possibilities that you could receive. Now, I didn't receive any of those. I ended up getting 2 stocks worth $9 and 1 worth $3, and I ended up getting like $21. But I still got 3 free stocks, which was a cool promotion. So Webull is a little bit more advanced than the other apps. They have a lot of tools, a lot of information, and a lot of things that help you when you're doing technical analysis for different stocks and trading. So this is one of the pros, but it's also one of the cons. So all this information is really good and really nice if you know how to use it, but if you don't know what it is, it makes it even more confusing when you're trying to use the app. So you see all this information, all these extra lines, and all these things in your way, and it gets confusing and a little bit discouraging. So another thing that I like about Webull is they offer something called paper trading, which this is a simulated trading account, which means that you can use fake money and invest into the market with this fake money, and it'll give you the same experience as if you're using your real money, but if you end up losing it all, it doesn't hurt you because you're not really losing your real money. You're just losing this simulated money, which helps you learn without getting hurt by losing your real money. So the tools available on Webull are really good for technical analysis on stocks and for crypto, which is nice because sometimes it's hard to find a place to do technical analysis on crypto if you're interested in that. But the things that work against Webull for beginners are kind of a hurdle. When you're trying to figure out these new things, there's a lot of information, a lot of tools, and all this stuff is really hard to understand, and so it slows you down a lot. And the app is kind of complicated because all these tools. Trying to make a trade is complicated, especially if you're trying to do fractional shares, because some are not supported, and other ones you can only do certain increments, so you have to do 25%, 50%, whereas on Robinhood you can do anything as long as you put in at least $1. So Robinhood is a lot more simple when it comes to fractional shares, and Webull gets a little bit complicated. Another thing that I don't like about Webull is I really like dividend stocks, and they don't offer dividend reinvestment. So that really discourages me from using Webull for dividend stocks. So with M1 Finance, I have kind of a love-hate relationship with it because I tried to use it in a way that it wasn't really designed, and it was very frustrating until I figured out what its strengths were. So I'll go over some of the things that I like first, and then I'll go over the other things that made me frustrated. So the best thing about M1 Finance is that it's set up for a hands-off style investing. And what this means is that you go in and you set up your recurring deposits, and you set up each of what they call pies, and tell M1 Finance how much percentage-wise you want of each stock in each pie, and what you want the money to do depending on the stock price. So say you want 50% in Apple and 50% in Tesla. Well then let's say that the price goes down on one of them, and when your recurring deposit comes in, it'll put more money into the one to bring it back up to the percentage that you want. So if you set up a bunch of different stocks in these pies, it will automatically distribute your money or your deposits into each of the stocks depending on how you set it up percentage-wise. This works well if a stock price falls a little bit and you want to buy the dip, because then it's going to take your deposit and put more money into the stock when it's down, which will lower your average cost, which will help you in the long run. So I really like the idea of different pies. The way that I set it up was I set it up for different sectors, so that I could see how much money I have in each sector, because I want to have an equally diversified portfolio. But the creation of pies is endless. You could have pies for apparel stocks, you could have pies for restaurant stocks, you could have pies for tech stocks. However you want to set it up, it's up to you, which is really cool. So this app is really good for long-term style investing, especially if you get your pies set up just the way you want it. Then you don't have to really even do anything. You set up your recurring deposits, check back in from time to time, make sure it's going how you want, but you really don't have to worry about it all that much because you set it up exactly how you want it to invest for you. This will also take your dividend payments and it will distribute them equally among different stocks, which is different from the traditional dividend reinvestment plan. The other thing that I really like about M1 Finance is that they offer custodial accounts, which is that you can set up an account for your child, and it will continually invest in this account on their behalf, and this will be beneficial for the wealth of your child in the long term. So this is something that I really like as well. Alright, so the cons about using M1 Finance, the things that made me really frustrated. The first thing is that M1 Finance uses something called a trade window, and if you don't have their membership package, then you only have one trade window. So let's say, for example, that you want to buy Tesla because it's at a certain price that you think is really good. So you put in a trade saying, I want to buy Tesla. Well, they say, okay, we're going to buy it tomorrow morning at 6:30 in the morning. And you think, well, Tesla moves a lot in price throughout each day. It could be a very different price from when I actually want to get it. So this is one of the worst parts about using M1 Finance, is these trade windows. If you have membership, then they have one at the beginning of the day and one at the end of the day. But still, if you want to get into a stock quick, it's not going to happen on M1 Finance. So this is only good for long-term investing. I wouldn't try to use this for short-term or even medium-term investing. If you want to get things with M1 Finance, I would buy stocks that you plan on holding for at least a year or more. So the other thing that I don't like about M1 Finance is they don't have a traditional dividend reinvestment plan. What they'll do is they'll take your dividend, they'll put it in your usable money or your deposit money, and then they'll equally distribute it throughout your different stocks. Unless you turn off the automatic distribution, then you can go through and choose where you want to put it, but it has to be over $1. If not, then you have to put in more money so that you can take at least $1 and put it back into whichever stock the dividend came from. So that's also pretty annoying. They also have a feature that's called rebalancing your account, which will sell some shares in order to get back down to the certain percentage and buy more shares to get back up to the certain percentage. Well, the bad thing is this punishes good stocks for doing well, sells them, creates tax that you have to pay, and then helps bring up other stocks that are low, which could be good if it's a good stock that's just at a low point. But this rebalancing is frustrating because it'll sell something that's doing well, and then you have to pay taxes on it because you sold it. Now, another frustrating thing about the auto invest is that if you buy a company that's not doing so well and it starts declining in price, it's going to keep buying more and more of that company as it goes down in price because it wants to bring it back up to the percentage that you have set. So that's also really frustrating because it's basically just throwing your money away as this company is losing value and losing its usefulness. Another frustrating thing about M1 Finance is that it's very difficult to make a quick trade unless you have everything set up beforehand. There was one day that I was on my lunch break and I wanted to buy some shares of NEO, but I didn't have it established in any of my pies, so I had to go in and figure out how to create this pie, how to put it into the pie, and do all of this stuff so that I could set up a buy order for NEO. And it was super frustrating because it was really difficult on the app to find everything, and so that was another thing that was really annoying to me. And like I said before, this app is only good for long-term investing. If you're trying to invest short-term or invest in stocks that are highly volatile, that go up and down a lot in price like Tesla does, it's not a good idea to use this app. I would use something else if you're trying to get in quickly. Another thing is that it's way easier to use the website than it is to use the M1 Finance app to try to set up all your trades and things like that. So Public is one that I had never heard of before, and I thought it was fairly new, but turns out it's been around for a few years. I hadn't heard of it until recently Graham Stephan started promoting it a lot. So my favorite features about Public are the social aspects that it integrates into the app. It takes something kind of like Facebook and kind of like Robinhood and puts them together. So you get people that you can follow, different influencers or other investors that you may like their investing strategy, and they can make posts on why they're investing in certain companies or why they buy a certain stock. And you can read and you can use that and put it into your own research, and it'll help you to maybe look at some things that you may have missed because you can add their input into your research. Another thing that I really like about Public is their town hall feature, which I think this feature is similar to a feature that Twitter had a few years back, also called Town Hall. And this is where they get somebody that's either a CEO or a high executive in a company, and they will answer questions of different users. So you can submit your different questions to this town hall meeting, And they will gather all the questions together, compile them, and find a bunch of the similar questions, and then they will submit the best questions to the person that's answering the questions, and they'll go through and they'll answer all your different questions about their company and about the stock. And this is really helpful when you're trying to research a new company or different companies, and they can come and answer some of the questions that you may have, whether you want to be a customer of that company or whether you want to be an investor in that company. So this town hall feature is really cool. So another thing that I like about Public is that they have the fractional shares available. They also have the dividend reinvestment, all the things that I like to see in a brokerage app. Another thing that they really like to point out is that they don't direct your order flow. They don't get paid for sending your trades to certain clearing firms like Robinhood does. So let's talk about some of the things that have frustrated me while using Public. The first thing is when Coinbase came out with their listing, their direct listing, everybody went and bought it when it was really high, and I decided to wait a little bit. And it came down to a lower price, and I decided, okay, I want to get in. So I sent in an order, a small order of $25, while the stock was at $324. And when it purchased it, it bought it for $326. I'm like, okay, that's a little annoying, but whatever. So then the stock went down even more. And so then I tried to buy it again, and once again, it went through at $3 or $4 above what I wanted to purchase it at. So their execution on price was pretty poor, which is something that they try to boast is good because they don't direct your order flow like Robinhood does. So they say they can get you better prices, but obviously it didn't happen. Also, like I had mentioned before, their order type labeling is misleading. They say that a stop order is, once it reaches a certain price, it will get you the best available price, when actually it just turns it into a market order. So that's a little misleading, but that's just a little thing. Another thing that was frustrating was that they do offer fractional shares, but they have a very small list of popular stocks that are available in fractional shares. So I tried to purchase a couple different stocks in fractional shares, and they wouldn't allow me to because they said they didn't support that stock as a fractional share. So that's a little bit annoying, but Public is a small company as well. So I do have to be patient with them as they grow and as they increase their availability of different fractional shares. So in conclusion, my favorite overall is still Robinhood. Despite all of the problems and issues they've had and all the things they've gone through recently, they still have the best overall coverage for everything you want to do with a stock trading app. Since they make it easy to trade, they make it easy to invest, they have dividend reinvestment, they allow you to use fractional shares, and they're the easiest one to use of fractional shares, they're my favorite by far. The reason that I started using M1 Finance is because Robinhood stopped supporting certain stocks that I was using, and so I was looking for another app to use, and I went over to M1 Finance. What I didn't realize is that M1 Finance is good at certain things, and I probably should have used Public, because Public, I would say, is the runner-up. They do a lot of the similar things that Robinhood does. They do support a lot of the stocks that I wanted and were on Robinhood but were no longer supported. So I probably should have used Public to buy those stocks that were no longer supported with Robinhood. So I would say that Public is the runner-up because they offer the closest thing to Robinhood with all of their fractional shares, the ease of buying and selling stocks and all that stuff. So Public is definitely the runner-up in this case. Now M1 Finance and Webull do have their benefits, and they are a little bit different, but their strengths are worth talking about. So Webull is definitely very good for technical analysis. Now normally I use my TD Ameritrade account for technical analysis, but they don't have crypto on there. So doing technical analysis with crypto on Webull is actually really good. It's much easier to do if you use the website rather than the app, because trying to do the technical analysis on the tiny little app on your screen is pretty difficult, but if you do it on the website, it's actually pretty good. So that's one thing that Webull does have that's really good, is the technical analysis. And if you're a more advanced trader, Webull might be a good one for you, especially if you feel like you're getting more advanced than Robinhood or Public will allow you to do, then graduating up to Webull will be beneficial for you. Now, M1 Finance is really good for, like I said, hands-off investing and long-term style hands-off investing. And also the custodial accounts for your kids is a really cool option that M1 Finance has, which custodial accounts can be found in some of the bigger brokerage firms. So when you're looking for custodial accounts, you should shop around to see which one offers the best. Also, paper trading is another cool thing that's offered on Webull, but they also have paper trading available on TD Ameritrade and some of the other ones. So once you get into these advanced style things, you might help shopping around trying to figure out which brokerage has the best features for you. So thanks again for watching, everybody. If you have any questions or any comments, leave them below in the comments. Let me know if there's things that you like or dislike about each of these apps, and if there's anything that I forgot or anything you disagree on. Let me know in the comments and I'll get back to you on it. Thanks again for watching, and until next time.